Welcome to the UK Investor Magazine podcast, the latest on shares, markets and investments, now available on your Amazon Alexa.
Hello and welcome to the UK Investor Magazine podcast, now also available on the UK Investor Magazine mobile app. For today's podcast, we're going to be taking a deep dive into Unite Group. They're a specialist student accommodation company listed on the London Stock Exchange. We're going to be looking at the growth prospects for the business going forward, and we're also going to be delving into recent numbers that have been released by the company. And to do that, we're very kindly joined today by Joe Lister, who is the CEO of Unite Group. Joe, thank you very much for being on the podcast today.
No problem. Delighted to join you. Thank you for having me.
So before we get into it, Joe, it would be good if you could give us, first of all, an introduction to yourself as well as Unite Group, please.
So I'm Joe Lister, the Chief Executive of Unite Group. I've been with the business for over 20 years in a variety of different roles and taken up the Chief Exec role at the start of 2024. The business has been one which has grown pretty consistently over that time horizon since floating around that time. Focuses purely on student accommodation within the UK. We work very closely with the leading universities within the country, and we are home to 70,000 students every year, spread right across the country, providing a home for success and helping them to get the most out of their time at university.
Thank you very much. So you mentioned their consistent growth, and that's one of the first things that I'd like to pick up on, Joe. In your recent results that were put out just a couple of weeks ago, we saw the rental growth, a key barometer of growth for Unite Group, increase 8.2% during that period. What were the key factors behind that, Joe? And do you see those influences pushing forward into the next year?
The key drivers for us are the higher education sector, really, and the UK is blessed to have a fantastic higher education sector. We've got some of the leading universities in the UK which continue to educate our school leaders, our school leavers, and also attract international students coming into the UK. And we've continued to see growth in the demand for that education, both from domestic and international students, and that continued through last year. Alongside that, we've also seen a squeeze on supply over the last few years, and particularly since COVID. I'm sure we can get into the drivers behind that, but that demand growth alongside a supply squeeze has meant that we've seen, as you say, 8% rental growth in 24-25. That was off the back of 7% in the previous year. And our outlook going forward is actually slightly moderated to more like 4 to 5% as inflation starts to tail. But we still see that as a pretty attractive rental growth outlook over the next few years.
Thank you. So I'd like to look at the mechanics of the business, if we may, Joe, and you know, your relationship with universities and students and the rental agreements. You know, are students coming directly to you? Are they coming through the universities? I think it would be good for listeners to set the scene in terms of the background of the business and how it works.
As I mentioned, we pride ourselves on the relationships that we built up over our 30 plus year history with the leading universities in the UK. We provide around 60% of our beds directly to universities under leases effectively. We call them nominations agreements, but they are effectively providing the universities with additional housing or beds for their first year students, because pretty much all universities in this country like to guarantee housing for their first years, such that when they go away from home, often for the first time in their lives, they are provided with a safe, secure environment. And we're able to support the universities with the provision of that accommodation. So 60% is provided directly to universities. We still do all the management. We look after the students with us and provide them with the quality of experience that we pride ourselves on. For the remaining 40%, we let those directly to students, primarily through our website and through rebooking to those students who have lived with us already. So they would typically be your second or third years, or also postgraduates. And this is now a really viable alternative to the traditional route where those students would have gone to live in the the private rental sector, the terrace housing stock, which is prevalent across most university towns. The students that live with us, we offer tenancies typically 40 to 44 weeks for those first years and 51 weeks for international students. And we're split around 70% for domestic students live with us and just under 30% are international customers. And they come from, just under half of those come from China. And then the remainder is very widely spread, with the biggest contributors being India, Nigeria, the US, many European countries and South Asia. So very widely spread in terms of the destination or the countries that those international students come from.
Yes, and we're going to talk about international students a little bit later on in the podcast. But when you kind of gave us an introduction, Joe, you mentioned the demand and supply dynamics. And one of the things I note is that the new supply of purpose-built student accommodation is down around 60% on pre-pandemic levels. Now, as a company, do you see this as an opportunity or a threat to your business model?
Yeah, it's actually a little bit of both. So on the opportunity side, we currently operate 70,000 beds across the UK. We're aligned to the best universities, and we are often in the cities where it is hardest to develop. So a constraint on supply is a positive because it obviously encourages more students to come live with us, and there's less opportunities or less competition coming from that level of new supply. On the threat side, we are a growing business. We have a skill set in development, and it does add value to our business from the creation of new buildings and the additional income that generates from it. But I think we are, and we've proven that we are very strong at developing. We are able to work closely with our university partners to secure planning permissions and consents, often change of use from what was a light industrial or a retail or an office use, and working with the university able to demonstrate the need for that accommodation. And then we have the skill set to develop in what are often complex sites. So the real drivers of that slowdown in supply has been the significant build cost inflation that we've seen over the last 5 years, driven by the post-COVID inflationary pressures, the various conflicts that we've seen, and utility price rises. And that's made it unviable to develop new stock in probably around 2/3 of the cities we operate in, just because the build costs have grown faster than rents. And so the development economics don't stack up. And that's what's really acted as that constraint on new supply. But having said that, we've actually got our biggest ever development pipeline. We've got 8,000 beds, which are either under construction or about to go on site. And those will be delivered over the next 4 years, bringing into some of our strongest cities.
And we are going to talk about the pipeline in a little bit more detail. But going back to the demand side and international students, Joe, of course, it's a significant part of your business in terms of the students that are renting properties from you. But there has been some changes in legislation recently in terms of who they're able to bring with them. But we've had a change in government. What are you hoping to see from Labour in terms of their approach to international students?
Yeah, so international students make up around 30% of our customer base. So an important part, as you say. Labour have actually, since they come in, set a much more positive tone around international students and how they are very welcome to come and study in the UK, that they make an important contribution to the UK economy. They're very important to UK universities and the funding of those universities because of the fees which they pay. And they also make an important contribution to society and offer some skilled labour, or a pool of very skilled labour, alongside then the soft power that comes with educating people from all over the world. As you mentioned, there was disruption last year when there was new immigration controls brought in around postgraduate students being restricted from bringing family dependents or other family members with them whilst they were studying. And there was also a review into the main graduate visa route. Now, that concluded that there wouldn't be a change to that route, but it did create some uncertainty for international students. And we did see a drop in the numbers of international students who came to the UK for this current academic year. Encouragingly, since I think a more stable environment and some of those messages which have come from the Labour government, we've started to see a pickup in visas to international students. They're up 14% year on year so far. And the UK is starting to be seen more favourably, particularly as Australia and Canada are introducing more stringent immigration rules for international students. And I think generally the US environment is seen as being less welcoming at this stage. We are seeing a new guidance come out from the government over the next few months, a higher education funding and policy, and also an international education policy. And that will give a bit more clarity on top of some of those positive sentiments which I mentioned a moment ago.
Thank you. So the pipeline, Joe, I'd like to bring that to life, if we may, and ask, what does it look like? What are the cities that you're targeting? In terms of the types of properties as well. The sizes, the scale. Are they similar to what you were doing previously? Or are you looking at larger ones? And maybe something about the amenities. Is there any evolution in terms of what you actually have in these properties in the pipeline if you compare that to what you maybe had before?
Yes, as I mentioned, our pipelines, about 8,000 beds are being delivered over the next 3 to 4 years. Those are based in London, Bristol, Edinburgh, Glasgow, and Newcastle. So all very strong university cities where we have established operations and relationships with universities. Just to give you a sense of size and scale, one of the schemes is in London. It's in Stratford, near to the Olympic Park, and where UCL, that's University College London, and University of Arts have built new campuses as part of the regeneration zone down there. So it's a 700-bed scheme. It will be delivered in 2026. It's a total investment from us of around £200 million. So a significant investment into that regeneration zone. As part of that, we are building a new academy for the local authority. So we are building on the site of an existing school, but we will be developing a new academy into the borough. And we're also providing 50% of those rooms will be let to the University of the Arts under one of those nominations agreements or leases, which I mentioned. So a really big, exciting new development, which is well progressed and will open up in 2026. In terms of amenities, as you mentioned, I think we've really seen this evolve over the last 10 or 15 years, particularly students wanting more communal space in which that they can meet and relax with their fellow students. So that may be common rooms with some games areas, TV rooms. We even have a few karaoke rooms across the estate. For the bigger buildings like that 700-bed scheme, we'd also put a gym to allow students to exercise. And then increasingly study spaces. So today's students spend more time in group study. So having quiet zones where they can study together with their fellow students, often with some technology within the room to allow them to prepare group presentations, or quiet single study space as well. So a range of different study spaces to allow students who don't want to stay in their room or may want to study more socially to come and do that within the study spaces that we provide. And we see that as all part of the overall offer to students when they come and live with us in our buildings.
So I want to go back. I know it's a long time ago now, Joe, but to the pandemic and the impact it had on the business. And really the question is here, has there been any long-lasting changes to the market? Because, of course, people will remember images of students cooped up in their student halls during that period, many years ago now. But do you see any long-lasting effects from that in the market and maybe in the business as well?
Yeah, Jonathan, as you say, it was pretty dramatic at the time, and it did place real strain on the students who are living with us, and also our teams actually trying to look after the students and manage the various rules and regulations that were in place. I guess what we've seen is actually the demand from students. We did see a real bounce from demand, so young people choosing that they wanted to continue investing in themselves and in their education. I think the value of higher education and the value of an on-campus experience as well. The demise, actually, there was some concerns or worries about whether technology would start to replace traditional university activities, but I think students and young people have seen the real value of coming together, learning together, and building their networks, and that was evident through COVID. So that has continued. I think the supply pressure that we talked about a moment ago is a factor, and that has come out of COVID, and that is here to stay. And then thirdly, really, is the reputation of our business, and one of the reasons that I think we've come out of that period extremely well is that we took a very responsible approach to offering rental rebates to students who are living with us who weren't able to return or chose not to return, which cost us around £100 million, but demonstrated to universities that in those times that we would do the right thing, and both financially but also in the levels of student support that we were able to provide to those students who were living with us.
We've discussed the rental income, Joe, but I want to touch on the property value now, and maybe the question here is really about how much is the value of the properties in your thinking, and how that plays into your strategy. I mean, the first part of this question is really how have values performed recently, and how do you see them performing going forward? The second part is how much is this a consideration, given that you're focused on rentals? I mean, do you employ an element of portfolio management? Do you dispose of any buildings or units? I mean, what does that look like in terms of the value side of the properties in the business?
Yeah, we are a property company with a very strong operational element to what we do. So we do think of ourselves and ensure that we're managing the quality and the value of our properties. We've got a portfolio of £9 billion worth of real estate. So it is very important to us to ensure that we get that physical infrastructure right, and protecting and growing the value of property. And from a shareholder perspective, we do think around earnings, and so the earnings per share that we're able to deliver to investors, but also then the total accounting returns or the return on equity, and a lot of that does come through the value of the properties as well. So in terms of the actual property valuations from the last financial year, they were up 5%, and that was driven primarily by the rental growth that we talked about. So where we are able to increase prices, that flows through to increase property values, and the 5% growth year on year was after offsetting some of the cost pressure that we saw around utilities and wage rates, and also a small change to stamp duty that came into play. And that flow through of rental growth into property valuations is an important part of the total return on equity that we're able to offer. And you mentioned disposals, that portfolio recycling is an important part of what we do. Universities go through different cycles in terms of their ability to recruit students, and we see new supply coming into cities as well. So we look to sell around 2 to 3% of our portfolio each year, and in doing so, that's able to demonstrate what the underlying value of the assets are as well. The student living space, or PBSA space, has been very popular amongst investors over the last 15 years as people see the real value in the living sector, and student accommodation gives investors a way in which they can access living assets, or assets which people can rent in real size and scale and volume. It's been very attractive to US private equity. We've seen Blackstone acquire large portfolios. Brookfield have acquired and sold a big portfolio. And then there's also quite a significant weight of capital from Asian investors, and they continue to be pretty active within the market. And that provides the good evidence for the valuation firms to be able to then say, well, this is where those assets trade, and that really then underpins the values at which these assets are held on our balance sheet.
Thank you. So I just want to touch on the dividend very quickly, Joe. Up about 5% to 37.3 pence in the last year. What can investors expect to see from Unite in terms of further increases in the dividend going forward, and what are the key factors driving that?
We've got a really clear dividend policy that we pay out 80% of our earnings, and that gets paid out each year. We have a guidance that we will grow our earnings by mid-single digits over the medium term, and we've been pretty consistently growing our earnings historically. So based on that guidance, we would expect to see continued growth in our dividend per share on that sort of basis.
Thank you. So to finish off now, Joe, when we're looking at the year ahead, what would you say are the three things that excite you the most?
Well, that's a good question. The first one really is that we're developing a new model where we're creating joint ventures directly with universities, and that's to help them to develop new accommodation on their land, on their campuses. So we announced our first joint venture with Newcastle University about a year ago. It's a really innovative new solution. Nobody else is doing it, and it really helps to allow the university to meet its ambition to continue growing its numbers of students in affordable, high quality accommodation. So that would be number one. The second one we touched on around the pipeline of new beds, so 8,000 new beds being delivered over the next 3 to 4 years. Not only will that deliver around £70 million of additional net income to us, it importantly frees up housing for local communities, and we've done a study to demonstrate how PBSA does free up that housing, so we are contributing to the overall target of 1.5 million new homes in doing so. And then the third really is just something which is intrinsic in what we do, and I think one of the very special elements to our business is that we work with young people at a very exciting time of their lives. They're often leaving home for the first time. And part of our purpose is to really ensure that those students get the most out of their time at university. So welcoming 70,000 new students to our properties come September and helping them on their way, hopefully helping them get the most out of the time at university, is always a really exciting, important part of what we do here at Unite Students.
Thank you. So just a note to listeners, Unite Group trades on the London Stock Exchange under the ticker of UTG, if you want to go and find out a little bit more. So Joe, thank you very much for being on the podcast today.
Jonathan, thank you. Pleasure speaking to you.
And thank you very much to everyone for listening. Thank you.
We hope you enjoyed listening to the UK Investor Magazine podcast. Please do share the podcast, and we really value any reviews and comments you leave us in your chosen podcast player. The views presented by the hosts and guests of the UK Investor Magazine podcast are in no way investment advice, and please remember all investment involves risk.